Diversification, which is also the theme of this event this year. Actually a buzzword that, at least in my eyes, still did not lose its strength. And this will be the topic of this panel. We'll discuss the hottest new trends in Forex and beyond, meaning what our people in the Forex industry are eyeing into. The panel's moderator is Mr. Viktor Golovchenko, who is also the section editor of our retail FX section at Finance Magnets. So I wish you good luck and enjoy. There will be a time for audience Q&A at the end.
Hello, good afternoon. And without further ado, I'll first let the speakers introduce themselves. And then we're going to know a little bit more about our audience to know to whom are we speaking after all. Cyril?
Thank you, Victor. Good morning, good afternoon, I don't remember everybody. My name is Cyril Tabet. I'm the partner and CEO at JFD Brokers, JFD Prime, and JFD Wealth. We run an OTC brokerage based on the MetaTrader 4 platform. We also do offer FX and CFD liquidity via gateway or the API connectivity. And we also have launched recently an asset management division, which is working quite well. Thank you very much.
Great. Tom?
Hello, I'm Tom Higgins. I'm CEO founder of have I gone off? CEO and founder of Goldeye. We are a product and services company, and we develop products to connect retail trading systems like MetaTrader to everything you can think of. And we have services to run those products for the clients. And then we just introduced a whole new area, which is regulatory reporting, which we're doing in partnership with Conficio and Triana.
Good morning, ladies and gentlemen. My name is Albina Zdanova. I'm the Executive Director of Tools for Brokers company. As many of you already know, our company develops software for MetaTrader 4 and 5 platforms, and we are responsible for such famous products as multi-account management and virtual dealer. Although Forex, which is familiar home field for us, we cannot take into consideration that Forex now is growing and there is a lot of non-Forex solutions now. And this is why I'm on this stage and want to discuss with my dear colleagues where Forex is going and what can be done to prepare for our future. By the way, I want to say thanks to Finance Magnets team, to Eras, to Bjorn, who invited me to this panel and give this opportunity to discuss everything. Thank you.
Thank you for coming. Seb?
Yeah, my name is Sebastian Kunert. I'm the founder and CEO of Trademo. We run a very large online trading school in English, German, Russian, and since 2 months also in Chinese and Arabic. And we are looking to launch new languages together with very good brokers. So if you're interested in that, come see me. And we are developing a mobile game at the moment that should hit the market in November, where we bring people that so far can't even imagine to get closer to the world of trading, be it FX or anything beyond it. And we're imagine the football manager for trading. That's what we want to be with that product line. So and I got lots of ideas for FX and beyond, so I really look forward to interacting with all of these smart people here and having fun.
Good afternoon. My name is Ryan Case. I'm the head of sales for Bullion Capital. We operate a membership-based exchange for the trade of physical gold, silver, and platinum. We operated across 11 international trading hubs. So these are actually pricing, storage, and delivery locations for physical gold, silver, and platinum. We also, apart from the exchange, the matching engine, we also have the full front-end GUI, which allows our members, brokers, to offer a white-labeled online platform downstream for their clients to trade the physical metals. Thank you.
Good afternoon. My name is Fadi from C Pattern. About myself, I was working 10 years, even more than 10 years, for FX brokers, and recently I have joined the C Pattern, which is a retention automation technology provider, which is working both on back end and front end with the retention agents and the trader. We interact with them, so in the end of the day, we make a big uplift both in redeposits and trading volume. And I hope you will enjoy this panel. Thank you.
All right, great. So now we'd love to know more about our audience. So how many of you are brokers? Technology providers? Okay. Then binary options related? Okay. Then let's see, marketing or? Okay. Oh, okay. Zero. You have to ask this yourself. No. So I'm going to start with asking the panel, what do you see as beyond FX? And we're going to start with the ladies. Let's see, Albina, what do you have in mind when it's going to, what's going through your mind when you hear this?
Well, the topic of the panel is more about CFD, about exotic symbols and everything that traders want to trade with. And currently I noticed among our clients that I will start from the beginning. A lot of our companies, a lot of our clients come to us at their beginning. They start with Forex, with standard symbols, and as far as they're growing, as they're coming bigger, their clients, the number of their clients is growing too. They start to looking CFD. They start to looking liquidity providers that can give them such kind of tools that can offer commodities, futures, and so on. And this is, as I see that, this is something like the level up for company if they can provide this kind of offering for their traders. Other thing is binary options. Of course, it's other field, but nevertheless, traders like them because to trade on Forex, on traditional Forex, they should have some knowledge, and that will not be the insurance of the success. And when it is Bitcoin, it's like gambling, and people like this too.
People like gambling.
Yes.
Well, Tom.
Am I on? Yeah. The most interesting one I saw recently was a completely new product that I'd not come across before, is offered by the American Cannabis Exchange, which I didn't know actually existed. But it does, and it's a recognized exchange, and it lists all these things like skunk and weed and things, these terms you hear in bars. And you can actually trade these products as real products, because I hadn't realized in the States that they are legalizing cannabis in many, many states. They're making alcohol illegal and cannabis legal, which seems a little bit unusual, but there we go, America's like that. So that one aside, I don't think we get any new requests from brokers who don't want to do CFDs and other products as well. They all want Forex as standard, CFDs, and then they want other interesting things like futures. They don't really want futures, actually. They really want CFDs on futures because they can't mark up futures. Equities a little bit, indices a lot, and it really is becoming the norm to ask for a lot more products on FX. It is very difficult to get liquidity as you go further away from FX, and so a lot of them have to take on the risk themselves and manage that risk themselves, which is harder to do in an illiquid product, unlike FX, which is almost unlimited liquidity as far as retail traders are concerned.
Cyril, do you have a request for cannabis CFDs or?
Not to date, no. Maybe it will happen one day, probably. I don't know. This market is always full of surprises. So I think that the real question is, we're discussing here FX, and we heard the word CFDs. It is what to offer or what to trade, and how to offer it or how to trade it. That's how I would summarize things. So obviously this industry has been growing for quite a while. It was based on what we call traditional liquidity, which was the Forex liquidity. And then obviously as the market was becoming more and more competitive, or the clients themselves were more and more demanding, there are new opportunities that came up, new technologies, new possibilities, and we've seen the CFDs coming up because they're covering a number of asset classes. So it added a lot of diversification from a trader point of view. So at the end of the day, I think that the question is why those brokers or you guys today are wanting to or keen on adding CFDs. And from our own experience, because we were probably one of the pioneers adding a number of asset classes on the MetaTrader platform, which I think everybody knows it, but it's the most widely spreaded retail trading platform, I think with more than 10 million daily users worldwide. So we've been adding 9 asset classes in there. So we're talking about obviously the FX, the metals, the indices, the commodities, the stocks, the ETFs, the bonds, the interest rate, inflation rates, etc. What it does generate are probably 2 things. First of all, from a trader point of view, they have the capacity to diversify their investment within the market. And this means that they can find the volatility where it is. If, for instance, the FX market are flat, they may find that the indices are quite volatile, and they'll find opportunities to go and trade. And what a broker wants is something that will trigger trades at the end of the day. So we found out for the last 3 years and a half, we're doing quite a significant volume on CFD trading, that we could sustain or grow our volume quarter by quarter thanks to those CFDs. The second, I'll be quick.
All right.
The other ideal also is when you manage your risks. We've seen that during the Swiss franc event, we only had 0.3% of our client base that was exposed to the Swiss franc. Therefore, it didn't generate much disruption in our business.
So it helped you weather the crisis better.
Absolutely, and our clients too. And it's true that when you have platforms where you have maybe 25 FX pairs and just a few CFDs, you have a big concentration of activity on specific instruments. So this is always a problem. From a broker side, obviously it generates good volumes, but also it's a great differentiator from a marketing point of view.
Right,
yeah.
right. So Seb, how difficult it is for traders to, you own the trading school, how difficult it is for them to trade CFDs? Is there any trends there developing? How long have they been developing?
So for an end client, it's always important that they are familiar with what they are trading, or that's at least one of the primary drivers of what they want to learn about and what they're looking for in a broker. They want to already be exposed to it in the marketing or learning side. And actually, a lot of beginners, I would say, are more familiar with individual stock CFDs than FX. So often I would say it's a handicap to only have FX. But if you have at least like some single stock CFDs that the clients in the market that you're targeting, if you can offer that, then it offers them more confidence that what you're offering is something that they are really interested in. So switching then to a new asset class, let's say you introduce something that is a bit more exotic. Let's think about things like Bitcoin, or let's say
or the guy next to you, which is Ryan, with their new asset class.
Let's say you introduce physical gold or silver, and the client has not been exposed to it before. Then I think they first need to be more familiar with trading in general, so that they get closer to the feeling that they can trade anything based on technicals and getting to know more of the fundamentals over time. Because a beginner, similar to, well, anything in life, I guess, has to focus on relatively few things and get to know those things in detail. And then over time, as they get bored of the few things that they are already good at and maybe look to diversify, look to trade more, find more volatility, like Cyril pointed out, then these things become more interesting, and at the same time, it's then easier for them to switch to that.
Right. So Ryan, speaking of the alternative asset class representatives on this panel, how do you position yourself? Meaning, how did you find the market for physical precious metals, and what makes traders look for that?
Well, in terms of how we position ourselves, it's very much as a complementary service. We've mentioned, I suppose, the competition and the diversification from a broker's perspective in a competitive market, looking to add a complementary service from a marketing perspective. So in terms of how we position ourselves, we're working with the brokers that we do in the Forex industry. It's as a complementary service to their existing suite of CFD or Forex products.
All right. So what is the difference between physical gold and CFDs? I mean, why would the traders be keen in trading physical gold?
Well, again, from a portfolio diversification standpoint, and if you look from a regional perspective, locations such as Asia or the Middle East in particular, there's a cultural affinity towards holding gold as part of an investment portfolio. So there's really, I suppose, less of a pitch that's required in certain geographic regions. The demand is out there. We are just providing the solution for brokers to be able to tap into that aspect of their clients' wealth.
All right.
So could I just add something
Yeah.
here, actually? I don't think we should always just treat the alternative asset classes on their own, because in the case of physical gold, something we've been looking at is where you can use the physical gold as collateral against your FX. Because if you've got physical gold sitting in a warehouse that's got a warrant on it, then that's wasted, really. It's just like having cash under your bed you can't do anything with. But if you can use that as collateral to trade FX, then I think you can really open up some of the world, because there's so much physical gold stored that's not being utilized.
So Ryan, do you have something to offer here?
So what we've actually created is electronic vault warrants. So these allow an investor or a trader who owns physical gold stored in one of our 11 international vaulting locations to create an electronic warrant on that gold and then pledge that warrant to their broker, so for instance to their Forex broker. Now, via cross-product margining, the client can unlock the value of that metal and put it to work trading the other asset classes as is offered by their broker.
All right, so 2-in-1 solutions incoming. How does alternative asset classes diversification help C-Pattern and your tools, which you're offering to the market?
First of all, to add to what he said about physical gold, I would like to...
Can you hold the mic?
Yes, sure. I would like to point out that with my experience with the Muslim trading world, some of the CFDs are considered to be haram, something that you cannot trade because you cannot physically hold. So one of his offering is to make it physical and to make it more
tangible.
Yes. Yeah. So what he offers actually can be very suitable for the Middle East or the Muslim trading world, which is considerably big. About CFDs and about the non-FX trading, a few years back when I started to work in the FX world, Euro-dollar was 80% of the trading. FX trading was the only thing. And today, I'm actually amazed to hear about even cannabis trading and about I don't know what else. Even oil trading and gold trading wasn't so popular. So we see today shifting for CFDs and future contracts. Also, after what happens in the Eurozone crisis, and the Russian ruble crisis, and the S&P, it became also risky to trade with the biggest companies, such FXCM and others. They had a pretty big. It was a boom for them to deal with such crises. As for a C pattern and for gold trading,
Or retention, or
yes, exactly. So we also see that beyond the FX and the CFDs, there is also the retention side. The retention side became the biggest aspect in how to retain customer trading, and not just to offer more pairs and more
assets.
More
Yeah.
assets. You need to also to educate your traders. You need also to educate your retention managers, so they will know how to handle this this trading. What we offer is, and what we suggest is, first of all, is to put your positioning and your branding also into education, because
Yeah.
otherwise you just offer something you don't know how to sell.
To the education point, do you feel that there is, Seb, do you feel like there is a way to do it more effectively than FX, for example? Have you developed some ways of doing that?
So, like, one of the things is, well, one of the things that we're working on is to make it less boring to learn something, because I guess it's the primary impediment to anybody learning a new asset class, that learning about trading or learning, even if it's online, can be very very boring. And so with Trademo Play, our mobile game, we try to bring people closer into the world of trading and familiarize them with things in a very interactive way, where they don't really feel like it's learning that they're doing. I think that's very important also for new asset classes, to introduce them in a playful, interactive way, rather than here's the article where you can learn how to trade cannabis now. And you know, of course that's a good start, and we'll also have
and
that.
They send you to the street with the gangs.
Well, yeah, I mean, yeah, rather have a mafia game where at the end you could. You need to hedge your market risk when your dealer's prices go up and down, and I mean, the world is full of trading. We just need to show it. So, and that's also where I think we'll be going. I think anything will be traded, and brokers have to become more that place where, yeah, I guess we'll see more of a convergence also towards things like sports betting and things like that. It's all about liquidity in the end, and of course the corresponding education, so they feel fine doing it.
Tom, I strongly feel you have something to add.
Well, I do. I was introduced to some really cool new technology by one of my friends who runs a company that develops software for virtual reality headsets. So this is a new thing that's really coming out at the end of this year. So like the Oculus Cult, he develops for multi-platform. And so I have this idea of combining the Trademo type game with a virtual reality headset. And you can imagine putting your virtual reality headset on, and when you put them on, you're in another world. It looks like you're somewhere else. You can walk around, you can turn your head, and you are moving inside that world. So if you can imagine, you could climb into a three-dimensional chart, and you could move around, and you could drag things, and you could look at your risk, and you could trade from there. I mean, that's just starting that sort of thing. But I mean, the really, really exciting sorts of things like that are coming up that will just change the way people look at things.
Or be on the old school sort of trading floors in trading places with, your full sort of thing.
Exactly, yes.
So Cyril, do you see such interactive tools helping brokers anytime in the future?
Well, obviously the accessibility is key. I mean, when you facilitate, let's say, the trading experience, it's always a plus. What I think, and I don't want to change the subject, but I think it's what is important to take into consideration is the risks as well. I mean, who is taking the risk?
All right.
Because at the end of the day, when you have, let's say, a day trader trading on a platform, or trading on some social trading networks, or signing or having a money manager that wouldn't be, let's say, regulated to trade on his behalf. It could be on FX, on CFDs, on any asset classes. The risk will be taken by the client itself.
The
So-
ultimate trader, the ultimate risk is with the
Exactly.
trader.
I mean, he's not clicking the button, someone else is clicking the button for himself, but then he's taking the risk. So I think that all these new applications are great. Education is important, training is important, but we don't want the end client to underestimate the risks. It's not because an application is new and make it easier that it will be easier to trade. It's good maybe from a broker point of view,
All right.
because it will trigger trades, but from a client point of view, I think it's very important to be very fair and remind them that the risk is always on their side. I do think that something that could make a good impact when it comes to trading non-traditional liquidity, such as CFDs, would be to, and that's what we're doing typically, would be to set up some strategies that are using a variety of asset classes and to demonstrate to the end client that it is, yes, possible to generate or to sustain better profits
Profitability.
by diversifying your investments and your portfolio, and then by the law of the exemplarity, then tell them that if we did it, they can do it themselves. And I think this is very important. What you see is what you believe in at the end of the day.
The ultimate retention tool is to make clients profitable.
I mean, somehow, from as far as I'm concerned, yes, obviously. And I think that if you are able to equip the client with an offering that enables him to diversify the risk, so maybe to give to a regulated vehicle or entity the management of some of his assets, and to enable him to trade for himself as well, I think this is a service that the client would very much appreciate, because he will understand that he's minimizing the risk, still getting the thrill, because they really love to trade.
Yeah.
And I think even there, the research and the quality of the research that any broker would provide to his client makes also a significant difference. And I still don't see enough multi-asset class ready research delivered.
It's just it's been starting for 4 years. Ultimately, we're gonna get there. So, Albina, do you have with Tools for Brokers something that complements this?
In Tools for Brokers, we develop software for MetaTrader 4 and 5, and mostly we work with brokerage companies. We advise them marketing tools to automate the server platform, to update swaps and so on. We can just discuss with our clients how to implement better, because in which country it's different. About virtual reality, for example, in Europe, even in Russia, there is such company that develop also virtual reality. It will go, and people are more ready to take this. But there are companies, there are countries that are not ready for everything this, where Forex just rising and so on. So for each client, you should
tailor a custom-made solution.
Yes, yes, because you should know who are your clients and what they want. There is no one recipe that will suit each client, each company in each country. Every time it should be individual.
Takes research and a lot of time.
Yes, of course.
All right. So, Fadi, do you feel like there is a continuation to this? And meaning that are your tools able to interact with this?
Our tools, first of all, are designed to help both the trader in the front end and the employees of the broker from the back end. Now, dealing with many assets is not ideal And dealing with many, as a retention manager, dealing with many traders is not also possible.
It's making it more complicated.
Now, what we actually offer is also interaction with the trader in real time to notify him and to warn him about news, about any occurrence that may happen. So we, for instance, we have integration with investing.com and Trading Central. And when it comes to this kind of assets, we can deliver the trader in real time about what happens. From the other end, when it comes to the retention manager, when anything happens with the trader, when we feel, our name is C pattern, we find the pattern, and when we feel something happens with the trader, we will notify in real time the retention manager, so we can give an answer in real time to the trader, and not when it's too late.
Right, all right. So before you lose any points. All right, well, what do you think is the most efficient way, like this goes to all the panel, the most efficient way to determine the product diversification which the broker needs?
I think as much as possible would be better for the end user, because I mean the end user can still choose what they want to do, but when they choose a broker, they want the one that doesn't limit them. From the broker's perspective, it's limited by liquidity, I guess. Like if you aren't big enough as a broker, then you can't afford it to offer too many things. Like then in the whole value chain, you have problems. But yeah, I guess that's why I'd expect to see more consolidation in the broker space, because it's just very tough for a broker to enter today and compete on the level, that the clients really want.
All right.
I think brokers often want to offer more than they need to. So they'll often say, we get approached by people saying, I want to offer 700 stocks to all my clients. And you think, you don't really want to offer 700 stocks. You're just sort of boasting how many you've got. In practice, maybe 20 of those will trade. So you do need to look at the infrastructural cost of offering products. Because if you're offering exchange-traded products, then you've got to pay exchange fees to the exchange, which people often, I think if they're coming straight from the FX world, where all data is free, they forget that you have to pay exchange fees, which are substantial. Just for showing those prices may rule out the benefit of actually having that tradable at all. And I think a lot of people actually offer exchange prices illegally and don't think about the effects of that. The exchange will come after you. They will go after you for the whole of the time you've been doing it, and they will take a lot of money away from you. So some of those have to be brought into mind. Bitcoin's an interesting one. We've had a few people who take Bitcoin. I think often they will offer it because it's an interesting thing that's in the press, and they will accept the inherent enormous risk of booking that because they can't cover it in the market. Some of the other products, the first one we were talking about, the cannabis exchange, at least I suppose you can take it to delivery if you don't want to trade it anymore, can you?
So I would very much agree with Tom. If you're looking at it, and when it comes to choosing or selecting which instruments, which asset classes, it really depends of which market you're addressing. I mean, if you want to summarize it or to simplify it, we would always say that you have a few FX pairs that are always heavily traded. Then when it comes to the CFDs, it will always be the indices, and we see yards on the DAX or the Dow. I mean, those are the two main ones, and it can equate to 70% of the trading volume on CFDs. So even if you just have these, you're offering your clients an opportunity to trade. Obviously, the more you get, if you're covering the Asian markets and you want to have specific indices that are relevant to these markets, or some stocks as well, or it really depends of what you want to do. It can be, let's say, a twofold approach. The first fold is to make sure that you can generate revenues from what you're deploying, and again, you don't want to deploy anything at any cost. It has to make sense. And here, there's just a small selection of instruments that you would need to deploy because they will be traded. But the second fold is how do you want to approach this from a marketing point of view to differentiate from the competition? So it is possible to go ahead and roll out a series of instruments in a specific order, saying now we're launching anything relating to the European market, and then then a few months later the US market, and then the Asian markets, and then keep on top of the headlines, keep a visibility, within the internet or any types of media. So it's a twofold approach.
Yeah, and then one would say that sometimes it comes ahead, like when there is this new big news event, people who are starting to look how to trade this, because, for example, with Bitcoin several years ago, when the media started making noise, only then was the trading community interested in how to trade it. And then brokers picked it up because they loved that it can be traded on Saturday and Sunday, so 2 more trading days. Especially for binary options brokers, they loved the stuff. So, so how do you feel in terms of marketing? Do you think that sometimes, this goes to the whole panel, do you think that sometimes the news is triggering the focus of traders on a certain asset? Ryan, maybe we'll start with you and the financial crisis, which triggered big demand in physical gold.
Well, certainly. Since the global financial crisis and subsequent government quantitative easing programs, there has been definitely a more attention given to gold and its diversification aspects as part of a portfolio. But I mean that continues up until this day. Last week, Bank of America released a note to their clients suggesting a higher holding of increased holding of cash and physical gold. So that continues right up until now. Even the first quarter of last year, the first quarter of this year, German gold demand is up 20% from last year for investment bars and coins. So certainly there is that ongoing trend, that ongoing demand across the board for physical metal holdings.
German savers don't like negative interest rates.
No, exactly.
How about them, Seb? You're probably a German saver.
Yeah. Well, yeah. Well, yeah. I think
you're saving money. Admit it.
I'm okay. I'm a big saver. Yeah. Also, I'm very German in that regard. I like that 70% saving rate or whatever. But yeah, I also like investing it, and I love trading it as well. And I think, yeah, news are definitely driving demands and making people investigate new things that they can trade. But it's also a question of the tools that you give the traders, because why are people only trading 20 things or 5 things or so today? It's because they don't have good asset scanners where they can find opportunities that match their strategy or like get self-generated signals based on their criteria. If they had that, then instead of forcing their will onto the chart, onto the 5 charts that they're looking at, they could scan the 30,000 assets that you can potentially offer them and really trade the things that are real opportunities instead of wishful thinking. And I think that will be one thing where we'll see more things developing. And yeah, but at the same time, when something big happens, so I imagine we'll see some bond crash at some point, then probably more people will look into going short on 30-year treasuries, and not many brokers offer that
started.
today. Yeah.
All right, Tom?
I'd started my career working in exchanges where you had physical pits with, we called them the animals, but they were the traders fighting with each other and making markets. And what limited launching new products then was the fact you had to build a physical wooden pit for people to go in, and you needed a lot of space, you needed a lot of equipment. Now with electronic exchanges, it's extremely easy to put new products up. And what is always the limiting factor is how much liquidity you can get into that product. But it is lowering the bar an awful lot by being able to launch these cheaply. You can have a product with less liquidity. So I think the alternative exchanges, and maybe some of the big exchanges, which all seem to be joining together, will start offering more of the products, because the advantage of an exchange is with something which is fragmented, you can pull all that liquidity together and have it in one place. So wine, for example, there's probably hundreds of wine exchanges around the world. If you put them all together in one place, you probably have good enough liquidity to trade that. There are lots of other products that if you bring all that fragmented liquidity together in one place like an exchange and you make it cost effective to trade, then it becomes interesting, and you can then provide that out to the retail brokers who provide it to their clients.
All right. Yeah.
One more thing. I think there's also potential. I don't know enough about this. It was just a spontaneous thought. But for using the cryptocurrency protocol for more decentralized anonymous exchanges for these fragmented asset classes. So
Exchanges on top of the protocol.
yeah, like peer-to-peer exchanges that just exist for instantaneous moments when people want to trade that, and the price that is then reflected on the exchange is just the last transaction.
Right.
So you don't have much of an order book there, but you can bring together that fragmented liquidity, and the broker would become more of a really a facilitator instead of somebody who takes risk.
All right. Can they, Cyril?
I was just thinking that the connectivity as well is something that will evolve in the near future. So how a client is connecting to the broker servers or the market. And I'm speaking with a first-hand experience on this. Didn't discuss this before, but I think it's quite interesting for everyone. We all heard about those VPS solutions and dedicated servers or managed servers to enable some EAs or algorithms to trade on lower latency, etc. So what we've been doing with Microsoft and Equinix using the cloud, we were not too sure if we could work this out, but now today I think I can say with quite some assurance that it will work out. We've been developing, let's say, a system with Microsoft. It's a project that has been funded by Microsoft, actually, and it's a proof of concept. And we will have the ability in a short time to connect any trader, any desktop user to our servers and to the market within milliseconds from wherever they are in the world without touching anything. I mean, there's no VPS to set up or anything like that. So I think this will be a very, it's a great plus. I do believe that once it will be launched, it will be some kind of a revolution because everyone will have less hassle to connect to the servers. And we're thinking also of some markets like the Chinese market where you have the Chinese how do we call it? The firewall, the Chinese wall.
The Great Firewall of China.
The Great Firewall of China. So I think this is something that will change. It's one of the business and technology transformation that are affecting the market. And we're pretty much excited with this, definitely. Yeah.
So this is going beyond FX in another aspect.
Yeah, it's really to connect and to trade whatever you want to connect.
Yeah. Albina, do you have something that goes beyond FX?
For me, I'm noticed from the clients talking about Bitcoins just from the side of brokerage, of those sites that offer them for traders. As I see, there was something like time lapse because when it was popular, there was a lot of news about Bitcoin. Then people just forgot about that, and just after that, brokers started to offer that for traders. And a lot of people already forgot about Bitcoins because I don't know any brokerage company that successfully launched Bitcoins. Anyway, they're trading on Forex, on CFDs. My congratulations. You are the first one, but I have heard a lot successful stories about CFDs and others.
All right.
I just want to add that about Bitcoin, that when it became a buzz, suddenly there was a debate inside the brokerage's house, the FX companies, whether to add Bitcoin or not. From one hand, there was a demand.
Right.
From the other hand, how can you deal with the risk that comes with the Bitcoin? And some of the brokers decide to go for Bitcoins. My personal opinion, it was a mistake. Some decided not to go for Bitcoin. It was very new and nobody knew how to handle the risk. And people in the news heard about the story that if you start, when the Bitcoin started, it was very, very low rate and became really, really huge. And they thought it will continue. But we learned in the Forex world that everything that goes up will go down eventually. And this is what happened with many clients that lost lots of money, and brokers that handled very bad with the risk side of things and also lost money. The feed was really bad. And it ended up, I think, not so good.
A lot of front running there, but we're getting into a different subject. So, do you feel like there is an evolution to be beyond the retention tools now? What's the biggest trend there in the retention tools?
Retention, allow me to share with you a story. One of my
if
clients...
it's not too long.
Well, don't worry. One of my clients told me, listen, Fadi, making FTDs is easy. I can bring now 5,000 new clients, but I am unable to retain them. Right. And I will end up losing both money and reputation. So a good story of broker start with good retention. What we offer is a good fit between the retention, the human retention, that will be complemented by a machine work. And we
bringing the best of both worlds.
We end up with numbers that is doubling the redeposit rate and the volumes. So, as I said before, and I will keep saying that, education and retention is what makes difference between a good broker and just another broker.
Right. Okay. Well, Cyril, you had something to add.
Yeah, I thought that when it comes to retention, there's one interesting way. I mean, most of the broker in the industry has been built on a conflict of interest. I mean, at the end of the day, with the client. But then, little by little, there's more and more brokers that have been diversifying and running a B book and an A book, etc., to manage their risks and to support some of their clients. So I think that when it comes to retention, most brokers now, you guys are discussing which asset classes should I add, what's next, how to gain more clients. At the end of the day, you're also considering how to manage the risk, how to integrate all this. What you should consider, and again, I'm speaking firsthand because that's what we've been doing, is to trade on behalf of your clients. Because at the end of the day, on an A book, what you want is trading volume, and that's how you make money. So if your clients are not able to sustain trading for a long term because they're not sophisticated enough, they will make mistakes, etc., set up an environment that would be fully regulated with very strong risk management, offer this to your clients, and part of their deposit will be locked in some vehicles that could be managed accounts or European alternative investment funds. And this money is locked, it's working, it's generating revenues for yourself, for your clients. It's fully client-centric, it's broker-centric as well. And I think this is the next evolution as far as I'm seeing things evolving. Really.
In the future.
I mean, right now, brokers, most of them, they don't feel that they want to take the risk to manage, but they could invest in this. They could invest in the right skill set, the right people, deploy these desks, service their clients this way, and make it happen. That's for sure a new trend.
All right. Tom?
Okay, thanks. One thing I wanted to add is there's ways of building a brokerage business, and you can build it from the front end where you put all the sexy stuff in there, you push it like hard, you have a load of products, and you have appalling risk management, and you generally blow up at some point. Or you can build it from the back end completely, you don't put anything exciting on the front end, and it's just too boring and nobody trades it. So I think you need a combination of both to get good retention and to make a good profit as a broker. So you build a very solid back-end system with very, very good risk management, very, very good back office, very, very good procedures. That's the boring bit that goes behind the scenes, but the really essential bit. And if you combine that with a really interesting front end, really interesting trading experience with lots of interesting products, then I think you've got a really captivating offering there to the market. And I think you do need, it's harder to build a business from the back to the front and the front to the back at the same time. But if you don't, I think it's not nearly as a long-term business as it should be.
All right. Yeah, Ryan, you had something to
Well,
say.
I just wanted to add from our perspective, we hear the comments back from our members, specifically in the Forex industry, on the increased client life cycle that they have from clients who are investing in gold. Obviously, it's a longer term investment, and that keeps that client with that broker for a longer period of time. So again, I think that applies to other assets that a broker might offer in terms of equities or futures, because going beyond Forex and offering these more longer term investment options means that you see more of the client's book. You see more of perhaps their investor money and not just their sort of short-term speculative trading funds.
Not just burn them
a
away.
question for you, if I may. Sorry, I'm taking your turn. Huh?
Go ahead, and we're
do you
passing
think
to the Q&A.
Do you think the volatility in the gold, which is pretty high, is something that scares your clients?
No, it isn't. On our exchange, it's 1-for-1, so there is no leverage. So the client's account isn't going to get blown up if there is a move. The other thing, and going back to our cross margining that we offer, the electronic vault warrants, a client can actually purchase physical gold, create a warrant, pledge that warrant to their broker, and then hedge their long gold position, physical position, using CFDs or XAU, for instance. So again, that allows the client to manage their risk in a way that keeps that client comfortable.
All right. So we're going to hear what the audience has to ask our panelists.
Good afternoon. Just in terms of your pledgeable electronic gold warrant, can you just indicate which brokers accept that from you at the moment?
The brokers are themselves offering it. So it's an internal cross-margining that they're doing. For instance, in Asia, our members operating out of Hong Kong, facing the China market, it's something that they're tremendously excited about, because effectively it allows their clients to take gold as a deposit, physical gold, and then internally they're cross-margining it and crediting the client's MetaTrader platform, for instance. So they're providing a loan-to-value ratio around 70-80%, but they're doing it themselves internally.
So just to elaborate on that then, in terms of, as an IB, which names, if any, that you could share with me that I could go to, that I could use the gold-back warrant?
I think I'd prefer to have that conversation in person with you and make that...
Fair enough. Thank you.
Oh, sorry. You're next. Yeah.
Hi. Well, I would like to ask a question on the Beyond Forex thing. Like, I'm hearing a lot of serious people talking Bitcoin and like CFDs on air temperature, but like I'm not hearing a lot on the vanilla options. It's a beautiful instrument. It offers like great opportunities for hedging and like betting on volatility. Like, I'm not sure who should answer this question, but could anyone like talk on this subject, because like I'm not hearing a lot on that. Thank you.
If I could answer, well, I'll have first words on it if you like. I agree with you entirely. I mean, coming from an exchange world, I see options as they're fantastic. I mean, you can use them as insurance. They're very straightforward. If you rename the product an insurance product, you said here you pay a little bit of insurance and you can cover your position for losses. Excellent. I think one of the issues is that the platforms that trade retail Forex do not support options at all. People have sometimes twisted an option in there, but there really isn't the support for options that you need. And that's a limiting factor. And so if the platform supported it and it could be sold correctly, because a lot of you go to England and you say options, they think, oh, I'm going to lose all my money, it's scary. But they're just thinking about writing uncovered options or something. So platform support isn't really there, and they don't understand the market. So education and technology to improve the platform support, then I think people should trade them, yes.
Yeah, maybe I can add a little bit to it. Yeah, I also agree that options would be fantastic for most traders if they understood them better. So it's an education topic, but also, like Tom said, a platform topic. And I think it will be solved very soon. I think we'll see more platforms coming up that support options in a way that maybe people in wealth management or in financial advisors could design solutions around a customer's problem. So let's say the client believes this and this will happen by this time and kind of not exceed this value and not go below that value. It's just many people don't understand which options they need to buy and sell in order to reach exactly that effect. And I think technologically we'll see solutions coming up that support that.
There were more questions on this side.
Oh, okay. Just coming back to the B book for a moment. During the recent, not so recent anymore, but SNB crisis, all the banks, quite a few of which have now withdrawn completely and aren't even at the show today, have always been pushing this A-book model, including all the regulators, which are backed by the very same banks that are pushing the A-book model. Yet the brokerages that survived and did okay, many of them were putting the clients on B-book, which gives a lot of currency to the B-book argument and says maybe actually in some ways there's less risk from the broker to run a well-managed B-book than to put everything through STP, which is always what people say you should do and is more respectable. So I just wondered what your views were on that particular question.
Just a quick one and then Silvan. I think you've got to be careful in this one. It's a little bit like someone saying, well, my granny smoked 100 cigarettes a day and she lived to 100, therefore smoking is good for you. The dangers of having enormous B-book positions, which people used to have before they had automatic STP, were horrendous. The swings were massive in their profitability, and they couldn't cope often. So I think you've got to be very careful about saying it's all good in the B-book world. I think you've got to have a balance, and so what we're seeing is a hybrid between A-book and B-book is the best model for people. It's definitely not 100% A-book, 100% B-book. It's the hybrid that we see as the most effective, the most interest.
Okay. Larry, thanks for this question because this is something that is very important to me. We run a full A-book business at JFD. It's 100% STP DMA, and we're not even licensed to run a B-book. Okay, we survived, and I think the major difference between what we do and what other brokers did is that first of all, we're very responsible. I'm very adamant with this. Which means that we're addressing sophisticated client. If someone does not know how to trade, we don't accept this client. We don't offer unrealistic leverages as well. Most of our clients are trading on a 1 to 100 leverage. Some of them are asking to trade on a lower leverage. So at the end of the day, we're also offering 9 asset classes, as I said, so they have the opportunity to diversify. We give them proprietary research. We're not buying out something. So we really develop something to equip our clients to be profitable as much as they can. And I think that as long as they're trading, of course, if someone loses and stops trading, I'm out of business. So it's really a different model. When Tom is discussing the hybrid B and A-book model, it's a great transition from what used to be a 100% B-book model. But I think that little by little, we could move to a pure A-book model, considering that as long as there are a conflict of interest between the broker and its own client, I think it's wrong. I understand that nobody cares really these days, but I think it's wrong, and I think that the risk should be taken by, say, the banks or the interbank banking market. So it's not that the banks have nothing to do, and the responsibility is on the brokers. I mean, if you run crazy promotions, unrealistic expectations, you have clients that have no idea of what they're doing, and you try to simplify the trading activity by telling them, go on the Swiss franc, you don't risk anything, it will only go in one direction. Of course, you end up having these difficulties. So I think there's no good thing or bad thing. There's a responsibility that is shared. I think this was a very good event because it's you can take out the best and the worst case scenarios or practices. Everybody's learning from it. It has been changing a lot of things, and everybody's feeling a little bit more responsible thanks to this. So it's a bad thing for a good thing. Yeah.
Right. I strongly encourage you to ask this question to the next panel because it's going to be about the SMB crisis.
Thanks, Victor. Thank you, panelists.
You guys.